What is going on, XRP Army? Welcome back to the channel. Today we are initiating a red alert protocol because the market is experiencing some of the most violent whiplash we have seen in the entire 2026 cycle. The title of this video is XRP turns volatile after Ripple's US moves investors watching closely. And if you have been staring at the charts this week, you know exactly what I am talking about. We watched XRP surge up to the 167 level on massive volume, only to violently crash back down to the 145 support zone within a matter of hours. Retail investors are panicking, screaming manipulation, and getting shaken out of their positions. But the smart money, the institutions, the whales, and the algorithmic trading desks are watching this volatility closely because it is exactly what they engineered. In this comprehensive three-part deep dive, we are going to expose the massive US regulatory move that triggered this volatility, why the 145 price level is the ultimate bear trap designed to liquidate your leverage, and why this exact setup is the precursor to the massive price explosion projected by elite Wall Street banks. Let's go extremely deep into the US move that caused this chaos. Over the weekend, the market was rocked by reports surrounding Ripple CEO Brad Garlinghouse and potential appointments or advisory roles within the Commodity Futures Trading Commission, CFTC. This is the definitive US move. For years, Ripple fought a grueling war against the SEC to prove that XRP is not a security. Now, in early 2026, the narrative has entirely flipped. Ripple is not just surviving in the United States. Its leadership is being positioned at the highest levels of federal regulatory influence to help draft the rules for the digital economy. When this news broke, the algorithms instantly bought the rumor, sending the price spiking 8% to 167. But as soon as retail traders piled in with high leverage, the market makers slammed the door shut. This is a classic liquidity flush. They used the bullish news to lure in greedy traders and then crash the price to 145 to liquidate their positions. We need to aggressively analyze the derivatives data to prove this manipulation. If you look at the CoinGlass data from this week, the XRP futures open interest, OI, spiked to over $2.56 billion during the pump. Traders were taking out massive loans to bet that XRP would break $2.0 immediately. The market makers saw this billion-dollar pool of liquidity and went hunting. By pushing the price down 11% in 24 hours, they triggered a cascade of forced liquidations. The OI weighted funding rate actually flipped negative, meaning the majority of the market is now panic shorting the bottom. This is exactly what capitulation looks like. The weak hands have been successfully removed from the market. The volatility you are seeing is not the asset failing, it is the financial machinery clearing out the tourists before the real institutional deployment phase begins. The US shift is real, the political influence is real, but Wall Street will never let you get rich off leverage. If you hold spot XRP, this volatility is just noise. It is a psychological test, and if you sell at 145, you are failing the test. Now, let's pivot to the underlying fundamentals driving this market, because the 15-minute price chart is currently lying to you. We need to talk about the massive price versus inflow dislocation that is occurring right now. While the spot price of XRP is getting hammered down to 145, the institutional money flow tells a completely different, incredibly bullish story. The US spot XRP ETFs, managed by financial giants like Bitwise, Canary, and Franklin Templeton, have successfully accumulated over $1.4 billion in assets under management, AUM, in record time. But here is the most shocking data point from this week. While the broader crypto market saw a massive risk-off event with Bitcoin and Ethereum bleeding $133 million and $85 million in outflows respectively, XRP digital investment products actually recorded net positive inflows of $33.4 million. Let that sink in. While Wall Street is selling Bitcoin and Ethereum, they are actively buying the XRP dip. This divergence is the smoking gun that proves institutions are aggressively accumulating while retail panics. Let's break down the tokenization and stablecoin utility that is causing institutions to ignore the volatility and buy the asset. In 2026, Ripple has officially entered what CEO Brad Garlinghouse calls the institutional deployment phase. A massive piece of this puzzle is RLUSD, Ripple USD. The stablecoin market is a multi-trillion-dollar opportunity, and Ripple has built a fully compliant US regulated stablecoin that operates natively on the XRP ledger. But here's the secret that retail investors miss: to move RLUSD, to trade it on the decentralized exchange, DX, and to utilize it in automated market makers, AMM, you must burn XRP as gas. As corporate treasuries begin using RLUSD for cross-border payroll and supplier payments, the velocity of the XRPL increases exponentially. This creates a perpetual non-speculative buy pressure for XRP. The institutions buying the ETFs right now are not trading the CFTC news. They are front-running the inevitable supply shock that will occur when Fortune 500 companies migrate their treasury operations to the XRPL. Furthermore, we are seeing Ripple aggressively expand its US partnerships to solidify this infrastructure. Recent announcements have confirmed Ripple's partnerships with major financial entities to tokenize traditional fund structures directly on the XRP ledger. Tokenization is the holy grail of modern finance, taking real-world assets like real estate, bonds, and equities, and putting them on a blockchain for instant settlement. The XRPL was custom-built for this exact purpose 12 years ago. It has the uptime, the low fees, and most importantly, the legal clarity in the United States. The current volatility is simply a symptom of an illiquid market transitioning from retail speculation to institutional utility. During this transition, price action will be choppy, ugly, and frustrating, but the on-chain metrics do not lie. Wallets holding over 100,000 XRP are growing, exchange reserves are depleting, and ETF managers are buying every single red candle. The US move is hardwiring XRP into the banking system, and the price will eventually have no choice but to reflect the network's true utility value. In this final segment, we are bringing it all together to answer the most important question: where does the price go from here? And how do you protect your wealth during this engineered volatility? We have the US regulatory breakthrough with the CFTC, the relentless ETF inflows completely defying the broader market trend, and the RLUSD stablecoin explosion. So what is the mathematical price target? The updated models from elite financial institutions, specifically Standard Chartered Bank, are firmly pointing to an 8.00 target for XRP by the end of 2026, with a macro extension target of 1250 by 2028. This isn't moon math from a random Twitter account. This is a calculated projection from the head of digital asset research at one of the largest banks in the world. Their thesis is based entirely on the $4 billion to $8 billion in total ETF inflows they expect, combined with the US regulatory clarity that XRP uniquely possesses. When a bank tells its high net worth clients that an asset is going to 8.00, they aren't worried about a dip to 145. They see the dip as a 400% ROI opportunity. What is your exit strategy in the face of this volatility? You need to be cold, calculated, and completely devoid of emotion. My personal strategy remains the thirds rule, which is designed to protect capital while maximizing upside. 1. Sell 1 to 3 of your position at the previous all-time highs. 3 bought 84. This recovers your initial capital and locks in a massive undeniable profit. You are now playing with house money. 2. Sell 1 to 3 at the cycle target. 7 to 18. This is the wealth generation exit. This is the money that pays off the mortgage, secures your family's future, and changes your life. 3. Hold 1 to 3 for the legacy play 2030 and beyond. This is your moon bag. If XRP becomes the core settlement currency for global tokenization and central bank digital currencies, this portion could reach valuations we cannot currently comprehend. Do not sell 100% of your stack prematurely, but absolutely do not ride 100% of your stack back down into a bear market. Discipline is the only thing that separates investors from gamblers. We also need to issue a massive security warning to the XRP army. As the price turns volatile and the US adoption narrative heats up, you are going to become a massive target for cyber criminals. We are seeing a horrific rise in SIM swap attacks, where hackers steal your phone number to bypass two-factor authentication and drain your exchange accounts. We are also seeing sophisticated AI-generated phishing emails that look exactly like they come from Ripple, Coinbase, or Ledger, offering fake airdrops. Action item: get a YubiKey, hardware security key, for your email and exchange accounts today. Move your long-term XRP holdings to a cold storage wallet like a Ledger or Trezor and stamp your seed phrase onto metal plates. Never, ever store your seed phrase on your phone or computer. If you have life-changing wealth sitting in crypto, you must treat your personal security like a bank vault. The bottom line is this: the volatility we are seeing today is the cost of admission for generational wealth. Ripple's US move has permanently shifted the geopolitical landscape of cryptocurrency. The weak hands are being shaken out, the leveraged traders are being liquidated, but the fundamental value of the XRP ledger has never been higher. The investors who are watching closely understand that the current price is a temporary illusion. Stay patient, stay convicted, and do not let Wall Street steal your bags at the finish line. Thank you so much for watching this massive deep dive. Please destroy that like button to help us wake up the retail investors. Subscribe to the channel, and I will see you on the moon. Peace.